Hi, I'm Matt and I'm Head of Passive Portfolios at AJ Bell, here to run you through the events of the second quarter and how it affected the performance of the funds. The famous football commentator's cliche states, it's a game of two halves, and that has definitely applied to the financial markets so far this year, with a large sell-off in the first quarter, followed by a bounce back in the last 3 months. The markets bottomed out on the 23rd of March, with the MSCI All Country World Index, a measure of global share prices, falling by 22% from the start of the year. From the 23rd of March to the end of June, the same index rallied by 29%, bringing the year-to-date return into positive territory at 1%. The UK stock market has had a tougher time, falling by 35% to the 23rd of March, before recovering by 26% to the end of June, bringing the total return to minus 17%. The performance of the AJ Bell funds mirrored this. A tough Q1 was followed by a strong Q2, leading to either small gains or losses for the first half of the year. Each fund holds a different proportion of international shares, UK shares, cash, and bonds, and it is this proportion of assets that affects how it performed. The Income and Growth Fund has a larger weighting in UK shares, as they typically offer higher dividends and so help to deliver a higher income. The lower performance of UK shares has made this fund lag against the others. In the longer term, 5 of the funds went through their 3-year anniversary in April, and all have delivered double-digit positive returns since launch. As a fund passes through its 3-year mark, it receives external ratings based on both return and risk. We are pleased to see that at the end of June, 2 of the funds had achieved 5 stars from Morningstar, and the other 3 funds had achieved a 4-star rating, placing them in the top 10% and 32.5% of funds respectively, on a risk-adjusted return basis. Coupled with the Morningstar ratings, the funds have maintained their 5-diamond rating from de facto. Over the quarter, we made a change to one of our holdings, switching from our iShares High Yield Bond Fund to a new ETF from JP Morgan. In addition, we added a high yield position in the Income and Growth Fund, which we believe will support the income. All the positions in the fund have performed as we would expect over the quarter. We remain long-term investors, so although the markets have rallied hard, we are in no rush to make any short-term changes to the fund, especially as central banks around the world have pumped cash into the system and interest rates remain at record lows. By holding lots of different types of asset, we've spread the risk across different regions and sectors. For example, the UK has underperformed the rest of the world, so the fund should benefit if this gap closes.